Hi, Vi from myfractalrange.com here. It's Saturday, 16th of July 2022. Another week passed by and it's time for another weekly process review. Actually, it was an interesting week. Euro dollar reached parity. Also, I closed one position, so I closed EWH EWO spread. I will explain why later in this video, but basically the main reason was significant change in the momentum. Uh, Previous week I was also talking about being patient, not shorting the market, and that markets are very choppy, and actually this week was a perfect example of that chop and what a choppy market is. So first of all, let's see. So over the previous week, SPY is down a little, but this weekly candle basically shows that the market just was not willing to fall further. So SPY is down almost 1%, QQQ is down more than 1%, and IWM down almost 1.5%. But those candles just show how choppy everything is. Secondly, VIX is even below 25, so of course the VIX at those values shorting the market is also not the best idea. When it was actually quite a good week for bonds, TLT up more than 3%, so yields are down. Okay, so yeah, now we will see how the signals changed and if it's a good idea to start shorting now. I think that it's not, but I will see those signals for the first time today. I was not looking at them yesterday, so let's take a look. Okay, so first of all, let's go to myfractalrange.com. Here I have my important to watch list. EWH, EWO is still here, and of course if you sort the watch list based on upside downside ratio, you see that the spread still has a huge upside downside ratio and quite a strong Hurst exponent, but I still closed it, and you will see why when we will move to the momentum scores. Okay, so from assets that are bullish, the only asset that is still interesting and has a high upside downside ratio is the dollar. Of course, euro dollar reached parity this week, so there can be some resistance, so we will see how it will hold. But of course, I'm still 90% cash now, and I'm in dollars, so I'm still very bullish on dollars. But keep in mind that I think that the road ahead can be difficult, but yeah, we will see. Okay, so SPY is in the middle of a range, still bearish trend. Upside downside ratio is almost the same. IWM actually has the upside downside ratio below 1, and QQQ only 0.74. Gold also looks terrible. Okay, so and what about the VIX? Also, the VIX is also signaling something interesting. So, of course, please note that VIX is bearish trend. It has upside downside ratio of 1.72, but because the trend turned bearish, I still am not confident to say that VIX will go up immediately. Of course, my overall view based on longer term signals and macro is the same. It hasn't changed, so I'm bearish on equities, and we will see. I'm sure that we will see VIX going up, but we still need more clarity and signals to be able to act. Also in this video I will touch a little on position sizing, because I received quite a few questions about how I structure the spreads and how I think about sizing them. So basically the question was if I do equal weight or beta adjust or what. So I will explain more on that later in this video also. Okay, so now let's move to almighty Python. And let's check the signal. So today I think we will start from momentum scores, not from correlations, and we will move to correlations a bit later. So let's start from the short-term view. So 5-day momentum scores for SPY sectors and other stuff. Okay, so on a 5-day basis, you see that TLT has quite a strong momentum score of 1.1. UUP, so the dollar also still looks good. Gold and silver looks terrible. Bitcoin is quite neutral, let's call it neutral. Yeah, so one thing that is good, of course, that on a 5-day basis, SPY still has a negative momentum score. Of course, it's normal after such a choppy week. So yeah, so commodities still look terrible. I will cover commodities a bit later, but yeah, hint that gold and silver is a no-go for sure. So at least now I have no reason to go long things like gold, and I know that some people are buying gold like crazy. So, well, at least in my opinion, it's still not the time. Okay, let's move to 10 days. And yeah, it will take a few seconds as always. Okay, so in this case, let's read. Okay, so dollar is the strongest on a 10-day basis, not a surprise. TLT is positive and SPY is positive. So again, another signal of a choppiness, because we have different signals on a 5-day basis and on a 10-day basis, which is not a good scenario in my model, especially for shorts. So yeah, gold and silver is terrible. Gold minus 1.8 and silver minus 1.5. Based on that, TLT slightly positive, 0.32. XLU is almost neutral at negative 0.13, but slightly negative. Yeah, okay, so if you want to see those charts, I tweet them daily, and for other sectors like developed markets, commodities, and so on, you can simply stop the video if you want to study those charts. Okay, let's move to 30 days. So for now we see that SPY is negative on 5-day and positive on 10-day, which is not a red light, still a green light for shorts. And on a 30-day basis, yeah, no surprise, dollar is king with a momentum score of 1.9. Gold and silver looks terrible. Also XLB and XLE looks terrible. SPY has a negative momentum score of minus 0.62. And Bitcoin is also strongly negative. So 2 to 1, basically SPY is negative on 2 time frames and positive on 1 time frame. So now let's go to developed markets. And here's where the fun starts. So let's first of all start from 30 days. And on a 30-day basis, we see that EWH is negative even on a 30-day basis, so it has minus 0.33, so this was one of the flags. And also EWO is minus 1.2, so of course I'm talking about EWH, EWO because I had an open spread on that. But on a 30-day basis, EWO has still more negative score than EWH, so it's not the biggest red flag. When we go to short-term momentum, you will see the real red flags that I saw, but basically still negative score on EWH is not what I want. But in the short term, we will see significant changes from few weeks ago when we had a positive momentum scores for EWH. So now let's go to 10-day. And yeah, as you can see, EWH has a momentum score of minus 0.1 for the last 10 days, and EWO has only minus 0.51. So basically, EWO is less negative than EWH. What has a positive momentum score from developed markets, so is EIS. And of course, SPY. SPY is just included in all the charts as a comparison. So okay, and the last one will be, as always, 5-day momentum scores. EWH is deeply negative with minus 1.2, and EWO is minus 0.3, so only slightly negative. So, of course, yeah, what else is interesting here? So EWQ, EWI has quite a neutral momentum score, and I can see anything positive here. So of course, on a short-term basis, developed markets has very negative momentum. Yeah, but I hope now you understand what made me react on EWH, EWO spread. So of course, it was a very significant change in momentum scores, and also EWH becoming more negative than EWO. Okay, now we will move to emerging markets. I remember that I skipped emerging markets in the previous video, so let's check them now. I believe that China will also be negative. Let's see. It's the first time I see this chart today. FXI. Okay, what we have here? Yeah. So basically same thing. China. And I was talking about why I am not trading China. The reason was that I had EWH, and of course EWH is very highly correlated to China. So yeah, and another example that basically my signal is tells me everything I need to know, because now a lot of people are talking about China zero COVID policy again, problems in banking sector, in real estate overall, commodities, but yeah, basically all those things matter, but for me sometimes it's enough just to take a look at the momentum and correlations to see the picture of what I want to do, and if it's a good idea to do something or not. Okay, so 5-day momentum score. So basically INDA has negative neutral momentum, ECH has a slightly positive momentum, but basically in the emerging markets we see that on a 5-day basis almost everything is negative. Okay, let's move to 10 days. Yeah, and on a 10-day basis also, what stands out? So China is negative, what a surprise. India is, INDA is actually positive. It's even more positive than the SPY based on the score. Now, other than that, basically not a lot of positive numbers. As you can see, almost everything is negative, and in some cases deeply negative. If we ICOL, Poland, EPU, things like that, we have a negative score of even below -1. And on a 30-day basis, I don't expect anything really interesting. Yeah, let's see. Okay, yeah, again, FXI is slightly negative. So basically, and those correlations matter, because if you run correlations of EWH, FXI, for example, you will see that actually I can run those correlations in a few minutes. So yeah, but on a 30-day basis, Again, basically everything is negative. Yeah, not basically. China is only slightly negative. Everything else is really negative in a serious way. So no long signals or bullish signals here, of course. And the last one is commodities. I was talking about commodities for months during our Twitter Spaces and said that commodities look terrible. For some reason, I expect them to be terrible still. Okay, so first let's go to 30 days. Commodities. Yeah, okay, here we have. So first of all, what is interesting, of course, USO is here, third from the right. Okay, so USO negative 0.76. Copper looks the worst. Copper, DBB, yeah. COW is has a neutral momentum basically. I remember on a short-term basis, a few weeks ago, Palladium was the only one which looked decent. So we will see Palladium in a short-term momentum, but yeah, on a 30-day basis, basically nothing stands out. Still terrible. Okay, let's go to 10 days. Okay, 10-day momentum score. Oh yeah, UNG. Yeah, of course. No surprise, knowing what happened in the markets over the last few weeks. So of course UNG is strongly positive. URA also positive, but only just a little. USO again negative 0.79. Copper looks terrible. So yeah, basically I know that some people were buying copper few weeks or a month ago. So yeah, it was a really bad idea if they did. So okay, wheat also negative. Yeah, so basically not a lot of positivity. UNG stands out basically. UNG lives in a different dimension, and of course we can clearly see that from the news, from charts, and from related things. Okay, so 10 days still terrible. And the quickest one to react, so 5-day momentum score for commodities is what? Okay, yeah, UNG, no surprise. And no surprise, copper, terrible. Coffee, JO, terrible. Even palladium, terrible. Yeah, so everything is terrible. So no need to be buying commodities. Also regarding things like silver, yeah, of course I included that in SPY sectors and other stuff charts. Yeah, but basically, of course, gold is not a currency, but it's not a commodity. But some people still like to add gold to the list. So we already saw that everything is very negative, including gold. Okay, so that's about the momentum. So yeah, so basically things to note that SPY out of 3 time frames, SPY is negative in 2, positive in 1. So we will see. For now, no shorting signals. In WHWO, I think now it's clear why I decided to wait. If situation changes, I still have it in my watch list, and of course, from the range perspective and a Hearst perspective, it's still promising. Also, one misunderstanding about Hearst and the persistence. Some people say, some people think that it has a ability to predict longer term moves. No, it doesn't. Hearst shows a persistence. So, as I explained in my Hearst video, basically you can use it for the probability of the move for the next day, maybe for upcoming 2 days, but it changes and you need to follow the Hearst on a daily or almost daily basis. So that's why, for example, EWO has a very high Hearst exponent, but now the spread went down for a couple of days. So you must understand that high Hearst asset can revert in a very persistent way also. So it doesn't mean that if an asset goes up. So if a Hearst is high, it will continue up. I mean, it can reverse in a very persistent way and still have a high Hearst. Yeah, so I still have it in my watch list, but you saw the momentum, so basically I hope it helps. Now let's move to correlations. And as promised, I promised you to show you EWH FXI, right? Okay, so now every time I will generate those matrices, also EWH FXI will pop up. Yeah, so let's start from SPY sectors, and let's start from 5 days. Yeah, so first let's get rid of those, and basically, yeah, so you can clearly see, for example, it's a 5-day FXI correlation to EWH. Of course, sometimes we get the spikes down, but it's very rare, and basically this correlation now is 0.93, so it's very highly correlated. And if we zoom in, let's say here, you will see that it went up from the beginning of July. Yeah, so now it already goes down slightly, but basically, yeah, it was like 0.5, now it's 0.93, so you cannot ignore those things. And of course, yeah, so that's why, for example, when I had EWH, I was saying that I will not buy FXI because a lot of people were buying China, and of course it was not a bad idea if you risk managed it well. Same with EWH. So if you risk managed it well and got out or hedged your positions or so on, it was not a bad idea. But it doesn't make any sense to have two trades that are actually highly correlated. So if you were buying China, no need to buy an asset which has 0.93 correlation to China, or vice versa. If you bought Hong Kong, it also doesn't make any sense to buy an asset which has 0.93 correlation to Hong Kong. Okay, so let's move to SPY sectors and other stuff, 5-day correlation. Again, still not a red light for shorts. I expect shorts, but we are still not there. Correlations are not really high relatively. We can see that, yeah, of course, SPY to DIA is 0.96, SPY to IWM is only 0.9, and SPY to QQQ is only 0.92. And based on SPY sectors, so basically XLB only 0.67, XLY 0.76. What has really high correlation is XLV now, but basically we're still not there. I'm sure you already saw from my tweets that sometimes those matrices are very purple, very deep purple, so those correlations are almost like 0.97, 0.98 across the board, so we are still not there. And on a rolling 5-day basis, yeah, also. And actually a week ago those were a lot higher, so there is a tendency for them to go down. So still I expect a choppiness, maybe the continuation of bull market rally, and if not, even if the market goes down, I expect it to be very hard to be short that market. Of course, those signals can change, but at least this is the situation that we have now. Okay, so this was 5 days. Now let's go to the 10 days. I believe this video will be quite long because I still have a plan to talk about sizing spreads and beta in the end of the video. Okay, so on a rolling 5 days correlation for a 10-day correlation, those are higher compared to 5 days. So yeah, of course those are slower to react. But also nothing extreme here, nothing extreme at all. XLU, as you can see, for example, XLU has a negative correlation to the SPY if you use 5-day rate of change and not a daily rate of change. So yeah, XLU is minus 0.2, XLE is basically almost zero, minus 0.03. Yeah, okay, let's move to daily returns. So for daily returns, SPY has a negative correlation to TLT. Of course, this is what I'm monitoring. Basically, I'm monitoring stock bond correlation and the SPY sector correlation. Those are the most important things. Yeah, so good. SPY is negative, correlations are not really high, basically nothing too exciting because the only thing that we see is that an average correlation is, I believe, like below 0.8, maybe 0.7, something like that if you do the math. So yeah, nothing too extreme. Risk is not building up fast, so okay. And as promised, also, so here is 10-day FXI to EWH. Currently it's 0.89. Sometimes we get a spike, but average correlation is like 0.73. So it's if we calculate like for 5 years or so it's even higher. For 2 years, average correlation is 0.73 on a 10-day basis. For 5 years, I see that it's 0.86. Yeah, but now it's very high. It's very high, and it went up recently. So hope it's a good example. And okay, let's see the 30 days. Of course, I tweet those, so you can always check. And for hours, you can stop the video. Okay, here correlations are quite high on a 5-day basis. Yeah, and it's normal because those are slower to react. So basically we have two scenarios. Scenario one, that 5-day correlations will start to go up, or those, so 10 and 30 days will continue to go down. And of course, if 5-day correlations start to go up, there maybe we will have a green light to do something in this bear market. On a daily return correlations, yeah, not a big deal. 0.99 is QQQ XLK, so it doesn't count. Of course, it's 0.99. Okay, nothing too extreme. And 30-day correlation of FXI to EWH currently is 0.8. So yeah, those things are really correlated, and no need to have both of them in your portfolios if you ever decide to. Okay, so now let's move to what? Developed markets. Yes, of course, developed markets. So 5 days. Oh no, 30-day correlation of rolling 5 days. Yeah, nothing too extreme. And actually, the level where I would consider it high is a bit lower, because of course SPY sectors are more related one to another, and different countries are less. So if for SPY sectors, I would say that high is like 96, 97 and so on. So if majority of those would be above 0.9, I would already say that those correlations are quite high. But as I explained in my first weekly review video, here what I'm mostly looking at is correlation to the SPY of them all. So if we go to the last line where we see SPY, so again, EWH now has 0.7 on a 30-day basis, EWO 0.63. If you remember my previous videos, those were a lot lower. So that was another signal, but of course the main signal was momentum. On a daily, yeah, EWH 0.63, EWO 0.67, so those correlations are really going up. And nothing stands out now, because like 3 weeks ago or a month or even 2 weeks ago, when I made my first weekly review video, we saw that Norway, EWH and EWO were totally from a different dimension. It had a correlation of like 0.2 and in some cases even negative. So no, we don't see that anymore. So yeah, the combination of those made me close the spread, but the momentum was the most important. Okay, so this is the same. And now let's go to 10 days. Yeah, let's move a bit quicker. So I will check only correlations to the SPY. Okay, EWH is still negative. EWO is also negative. Well, actually not still negative. It turned negative again. So actually, yeah, interesting. So that's why I have it in my watch list. But other than that, no, not interested in that for now. Okay, yeah, EWI, EWK, EWP, yeah, quite a lot of interesting signals. So basically, what I usually do is I add, basically I spot the assets that has a lower correlation to the SPY, and then I add them to watch list, and then based on other signals, so not only correlations but momentum and so on, I combine them to spreads and then add those spreads to my watch list, and I'm waiting for signals to act. So for example, if I have two interesting assets and one has a positive momentum score and another has a negative momentum score, so I can try to combine a spread based on those and calculate volatility, ranges, Hurst, trend, and so on, and then I'm waiting for a signal if we have any. Okay, on a daily basis, yeah, so of course that negative correlation was on a rolling 5-day basis. On a daily basis, like I said, those correlations are going up, so 0.41 and 0.34, still not what we saw two weeks ago. It was lower, and before I started making those videos, it was even negative actually. Okay, so what stands out? And again, Norway, WH, WO, and basically that's it. Nothing interesting here. And the quickest one to react, 5-day. Okay, EDEN is negative, interesting. EWK is also negative. Yeah, EWO is very negative, and actually it's makes sense because SPY had quite an interesting week, and basically this week EWO just did completely the opposite thing. So yeah, I remember that. Yeah, quite a few negative correlations. Very interesting. So maybe, of course, keep in mind that it's rolling 5 days. So basically, those matter if you basically hold both assets at least for 5 days. You can expect that. On a daily, we will see totally different thing. I believe, yeah, of course, it's rare to see some equities having negative correlation on a daily returns. We saw some EWH, WO a month ago, but now it's not. So yeah, EWH looks good. Okay, EWO, no, 0.83, not that much. Yeah, so nothing stands out except EWH, maybe Norway, but no, 0.47 is not what I'm looking at. 4. Okay, so that's about developed markets. Now let's go to emerging markets, and the scenario is the same. We will only look at correlations to the SPY. On a rolling 5-day basis, we have negative EIDO, we have negative EWM, neutral ICOL, and low correlation has basically Poland also. Yeah, Poland is interesting. I have it in my watch list. Again, no trades, of course, but yeah, I have it in my watch list. I will see what can be done there, but most likely, if I ever get a signal, it will be on a short side, but maybe signal will change. We'll see. Okay, and on a daily basis, yeah, correlations are going up. Basically, those are quite high. So yeah, EWM 0.43, but basically nothing interesting. Nothing interesting. And if again, if you want to study those charts, just stop the video. Okay, 10-day basis. On a rolling 5 days, EWM is very negative. ICOL, Poland slightly negative, yeah. So, but first I'm always looking at the daily returns. So let's see here. EIDO, yeah, maybe I will add that to my watch list to see what's going on. And also we'll compare our signals, of course, for that ticker. But yeah, EIDO, EPHE maybe. But overall correlations are going up, not only in the US sectors, but basically in the emerging and developed markets and so on. And of course, if you want to combine maybe some ideas for your watch lists, not with SPY, but from two emerging markets assets or two developed market assets or whatever, basically you can see a lot of interesting things here, like EPHE versus EWY and so on. But again, this is educational material on how to use the things I post and how to use the things that we offer for you in my fractal range. So yeah, but if you see something interesting, feel free to add them to your watch lists and see how they behave, and maybe you will find something interesting. And of course, if you find something interesting, let us know on Twitter. And the 30-day basis. On a rolling 5-day basis, yeah, nothing interesting. QAT maybe, but yeah, of course. EPU on a daily basis, absolute ICOL maybe, but that's basically it. EPHE. Yeah, okay. So before I start talking about beta weighting and combining spreads, yeah, so let's do some conclusions. So from the Hurst exponent here on my fractal range, if we see that some assets have quite high Hurst, so it's good. But the assets that really matter, for example, the SPY, has quite a low Hurst and so on. So basically, I still expect the overall market to be choppy, and my overall view haven't changed. So I have plans to open some short positions when the time is right. Maybe that time will be right soon, maybe not. But based on this analysis, we still need to wait. So that's what I'm going to do, at least for on Monday. We will see what the signals look when I refresh them on Monday. But basically, I don't see a clear green light. Maybe actually maybe let's call it a yellow light. That basically maybe time to short is sooner than it was before. So it's coming, but it's still not here. So yeah. I want SPY to be negative momentum on all, of course, and the VIX. VIX is below 25, so come on. I mean, first we need to see some action on VIX. Yeah, of course, best way to initiate shorts when volatility shows signs of reverting, because now volatility goes down. So basically, okay. So hope this helps, and now. Let's talk about weighting. So position weights, how I combine spreads, and yeah. So quick answer is that it depends. Sometimes I do equal weight. So equal weight means, for example, so now I'm just I open this chart just as an example. So whatever I'm talking is not related to EWH, WO. just in general. So sometimes I do equal weights, so it means basically you do same dollar amount on a long side and the same dollar amount on a short side. So for example, basically, I don't know, $1,000 on long EWH, $1,000 short EWO. So it's called equal weight, and sometimes it makes sense to do that, especially if volatility of those assets is not very different. But from risk management perspective, you must always know what to expect, how that asset behaves. So basically, realized volatility matters and the beta. So I don't use beta that you can find on places like Yahoo Finance or brokerage platforms or some other financial websites. In most cases, they provide things like 3-year beta or 5-year beta, maybe sometimes 1-year beta, but that's not what I'm looking at. I calculate beta myself, and I use shorter time frames because, again, 3-year beta will not help in active trading or active portfolio management. So I will show you some examples, but basically I'm using in most cases I'm using 6 months or 3-year, because of course for beta, if you use very short time frames, values will change drastically every day, and I mean it can be used for proper risk management, but 6 months or 3 months in some cases can be used. So yeah, so sometimes I do equal weight, but in most cases I do beta weighted, and I will show you how it works. So again, we will take EWH or EWO as an example. I will run my beta script, and now, for example, yeah, so I use 126. 126 is basically 6 months. So if I run the script, the chart will pop up. So basically, what is a beta or beta coefficient? Basically, it tells you how volatile is the asset compared to the market, or compared to another asset, and I will talk about that soon. Because yeah, usually when people are talking about a beta, so yeah, basically how it compares to the market. So of course in the US, the most common thing is S&P 500. The market is SPY. So basically, how volatile EWH is compared to SPY, as an example. And the current beta is 0.41. So to the surprise, EWH is a lot less volatile compared to SPY, based on 6 months of data. Now let's take a look at EWO, and then I will show you that basically you can do that quicker instead of measuring it against the SPY, and it will make sense mathematically as well. So for example, EWO has beta of 0.87 now. So EWO has higher beta than EWH. So basically EWO is more volatile than EWH. And basically for spreads I do it in a quicker way, because mathematically it will make the same sense. So basically, instead of doing EWH to SPY and EWO to SPY, I can do that basically EWH to EWO. And if you remember, EWO has a higher beta, so basically EWH is less volatile than EWO. So basically, I'm sure that EWH will have a beta way below 1 compared to EWO if we simply do this math. And you will see that it makes total sense, so you don't need... if you want, you can simply measure beta against another asset, and yes, it's true, basically EWH beta is only 0.32. So that's why I told you that basically beta is telling you how volatile an asset is compared to a market or another asset, because in most cases I think of it as how volatile it is compared to another asset. So now what to do with this number? So let's say you wanted to open EWH, EWO spread, so EWH on the long side and EWO. So basically, NDWH is way less volatile when compared to EWO. So basically, and that beta is 32. So basically, you can do that basically 1/3 of EWH, sorry, 1/3 of EWO on the short side and 2/3 of EWH on the long side. Why? Well, because EWH has only 1/3 of the volatility of the EWO, simply put. And you can do that in another way, because if beta is above 1, so let's say beta is of something is 1.2, so basically it means the asset you want to buy is more volatile, so basically you buy less of that asset and short more of another asset. So for example, if a beta is 1.2, basically you can just use it as a multiplier. And now about adjustments. I don't adjust that daily, so if I keep my positions for long, I usually adjust it on Friday, once a week, because daily doesn't work in my opinion. Some people will argue with that, but yeah, rebalancing daily, for especially for retail trader portfolios and for active retail accounts, it's just too much. So basically, regarding position sizing, how I decide if I want to measure beta or if I want to do equal weight. So for example, if assets are very similar, so I will give you an example. So for example, IWM and SPY, and I want basically both for indices. Yeah, of course, SPY is a bit less volatile, but sometimes when assets are very similar, I just do equal weight, because I know that I will be monitoring those positions daily anyway, and if something changes, I will be able to react. So very liquid, very big assets that are highly related one to another, sometimes, yeah, I just do equal weight, and I know that some people will say that it's crazy, you cannot do equal weight. Well, it works, at least for me. But yeah, for things like emerging markets, developed markets, commodities, and so on. So volatile, really volatile, or less liquid stuff, or different stuff, I always try to do beta weighting, but I don't readjust it on a daily basis. And yeah, so I use 63-day beta or 126-day beta. So basically, it's 3 months or 6 months. And why I use those numbers? Because same like with moving averages and so on in the media and on CNBC and so on, you know, people are always talking about pretty numbers. I mean, like 20-day moving average, 50-day moving average, 100 or whatever. But actually, those numbers, what do they mean? Nothing. They are just pretty numbers. I mean, 150, it's just a round pretty number. That's it. And I always, for everything, I use the numbers that mean something. So if it's a 6 month, or for a year, I would use 252, or maybe sometimes 256. For 3 months, I would use 63, and so on. So I use numbers that make sense for me, and I don't change them, of course, because if you start using one number and after some time you will change that number, well, basically you need to readjust everything. Okay, so hope it answers the question. If you want me to talk more about beta, about position sizing when entering spreads, about position limits, let me know. Well, regarding position limits, I don't know what I can tell, because it's very, I know, personal. Basically, so it differs from person to person. Basically, I never go more than 5% on one position, and in the case of a spread, basically 5% is both combined. So basically, 5% of your account is maximum you can do. That's what I do, and usually I start with 1% or 2% and then scale. But basically, position limits, I think it depends on a person, on a situation of a person, and risk tolerance and so on. So yeah, but position sizing basically, for spreads, yeah, sometimes I use equal weight and sometimes I use beta. In most cases, if I'm trading just major US things, I will be honest, and so I skip that beta part and I just do equal weights. Okay, so hope it was helpful. Let me know if you have any questions, and have a great week, and see you in another video.